We have had this topic on our minds for quite some time, despite the fact I think we can bluntly acknowledge we're not experts around here. The first time we ever wrote about blockchain, in fact, it was because we had an intern from the University of Michigan, probably about 6 years ago, who said, you got to write an article about blockchain. And we were like, what the heck is blockchain? And he did that, and it was good. And we became more informed. I think maybe we'd heard of it, but we were not, I think this is one of the reasons we wanted to do the session. It continues to be, for those who are not immersed in it, an area of confusion. But it's also an area of extraordinary development and innovation, as our two panelists will explain. Just one last comment about my own ignorance. It's so bad that I misspelled Ethereum in the article I wrote yesterday, and Lex had to point that out to me, which is really embarrassing. I don't know how many times I've done that before, because I'm generally a good speller, but that was really awful. Let me quickly introduce our two great panelists. I mentioned Lex, so I'll start with him, although we're going to let Jalak go first in the commentary. Lex is the global co-head of wait, what is it? Global co-head of what, Lex?
There's some fintech in there.
Global FinTech, that's what it is. It's such a big picture title that I kept losing it. At Consensus, which is a really important emerging company based in Brooklyn, although Lex is in London. And it's a company that does most of its work around Ethereum, blockchain infrastructure, and it's basically a technology company, but it did a very important deal this week with JP Morgan Chase, in which it took over a private blockchain that JP Morgan Chase had developed for itself. And JP Morgan Chase then took an equity stake in Consensus, which is quite an important development that we're going to ask Lex to explain. Lex is a friend of Techonomy. He's written for us, I believe, 3 times. He's written one time about digital art. He's very wide-ranging interests and has had a fairly long career, especially considering his relative youth in finance, both conventional and crypto. So Jalak Jobanputra has also been part of our community and has appeared on our stage at Techonomy New York City, talking about crypto and blockchain related stuff. She has been investing as a venture capitalist in blockchain related technologies and companies since 2014, which is a long time. So I think I want to start by asking Jalak to explain to us what got you excited about this in the first place, and what you've learned in the interim, and what you think basically the key issues that ordinary business and tech interested people ought to understand about this area. And after we've heard from both of the speakers, we're going to talk a little bit about what we learned in our poll, which is still coming in. So if you haven't filled that out, please do. So Jalak, to you.
Well, thanks for having me. It's great to be here talking about one of my favorite topics. So I've been a VC since '99 and was a tech investment banker before that. So was a banker when Netscape IPO'd. As you've been in the sector for a while, I've seen the evolution of the internet and invested kind of heavily in the early days because I did think it was really transformational in terms of being able to connect the world, give people access to information. And so when I decided to launch Future Perfect Ventures in 2014, I had been working around a thesis of what was next. What was the next stage of all of this connectivity that the internet, mobile, broadband, cloud computing all have enabled? And I went to a Bitcoin conference in 2013. Since I was in finance, started my career in finance, I was very interested in the way that technology had been transforming finance, and I had heard about Bitcoin and this kind of new way of or new currency where you could transfer money pretty much instantaneously to anyone in the world with very low fees, without having a bank account, without having to pay these like $30 wire fees that we get charged all the time. And that money was safe and secure. And I was sold immediately as soon as I kind of started digging into the technology behind Bitcoin, which we now refer to as blockchain tech or distributed ledger technology. And what was really exciting about it is that it really reduces the need for intermediaries for transactions. Because transactions are verified by computers and not people, you don't have the lag, you don't have the fees associated with having networks of counterparties and intermediaries. And to me, having been born in Africa, having spent a lot of time in the emerging markets, I just saw how much of the world still didn't have access to finance, didn't have access to the internet. It's because it was just too costly for them to access these services. And I felt like it was absolutely essential to kind of the future GDP of the world for all of us, not just people in emerging markets, that we could reduce all of these fees that have been piling up over the years, kind of out of necessity in the 20th century, but it was time to move to the 21st century. And that's what really got me excited about this technology. And finance is really the first sector that is kind of benefiting from a lot of this technology, because I also have this theory that when you have too much legacy infrastructure, those are the most ripe for digitization. And we actually have so much legacy infrastructure in the way finance is conducted around the world. And so while we've seen some digitization, people still use a lot of cash. We still, as I said, have all these wire fees, and banks are operating very much on a 20th century model. So to me, this was just a way to use the increased computing power that we now have. We now have more computing power in our cell phones than NASA did when they sent a man to the moon in '69. So we've had all this increase in processing power. We have all this connectivity, and how do we bring all of this together to allow computers to actually verify transactions? And that's really what blockchain tech involves. David, I think you're.
All right, that's what I do. That was a great intro, I was saying. So before we go to Lex, though, what are you seeing now as an investor that is most exciting to you in this area?
Well, just like the internet in '94, when I got involved with it, it's kind of wide open for investment, and in terms of infrastructure is still being built out. So while Bitcoin was the first application, the first blockchain that used these networks of computers to verify transactions, we're now seeing the emergence of new blockchains. And I think what's the most exciting about that is that the core technology can be applied to many different sectors. So if you think about I mentioned the instant transfers, there's also a large amount of security associated with Bitcoin transactions, because so many different computers and nodes around the world are verifying these transactions. There's so many different copies of the ledger, which is a single source of truth. And so that means that there's no one single point of failure. And so bringing that and the idea of being able to put any assets onto this ledger where there's provenance, where you can see when it's changed hands, what the different characteristics of an asset are, and even starting to program characteristics of assets, who it can be transferred to. That's kind of the next stage. So we're seeing like these what's called layer 2. If you look at Bitcoin and Ethereum, they're layer 1 solutions. Layer 2 solutions allow some more of those capabilities, and then layer 3 will be applications built on these 3. So very similar to how you see like the internet evolve. And we're still seeing a lot of innovation, and I know Lex is going to touch upon this at that layer 1, and then you think about all the investable opportunities all the way up the stack, and it gets really exciting.
That was great. That was a great setup for Lex, actually. And by the way, I forgive my interruption here if anybody noticed it. I had a dog jumping out the window outside my door, and I had to get my wife to remove him to another location. So Lex, you must get frustrated because you're working sort of at some cutting edge areas. When you talk to conventional crowds like ours or sort of general business audiences, there's a little bit of a perception and reality problem, you know, because so take us as far as you can from what Jalak just said to what you're doing and why it matters and how you see this world.
Of course. Um, I I don't get frustrated. I think it's actually the funnest thing to be at the frontier, and then um, it's easy to be at the frontier because over time you just get more correct, and you can stand where you are, and the world comes to you. And this happened to me in a previous theme that I was involved in digital wealth and robo advice in 2010 when people thought, why do you want to have small accounts or small customers? Why do you want to put digital investing into a phone or the web? It should be brokered, and it easy to just have the world come to you. I think the frontier with blockchains is fantastically exciting. We've touched on some of these fundamentals about what they can do. At the core of all of it for me is the idea that you have digital scarcity, which you just simply did not before blockchain networks were around. Um, a digital object which is anchored to this particular type of data store is scarce, the same way that an apple or a sandwich in the real world is scarce, the same way that if I give you a block of gold, you have it and I don't, and similarly, if I give you a Bitcoin, I no longer have it. And that's not true for a bank account number, it's not true for a record of Apple stock at Schwab, it's not true for uh, the Federal Reserve allocation to a member bank. Those are
Personal
just
data
all
about
numbers.
our behavior.
Say that again.
It's not true for personal data about our
It's
behavior.
certainly not true for personal data, and it's not, it's not true for a movie one would pirate and send to somebody else. And so all the sort of like mammalian instincts we have about what an economy is doesn't work uh, in a world where the top 4 companies are worth $2 trillion, and there is no digital scarcity, and you have this data and advertising stuff going on. And so scarcity around assets just means you can have economies that are digitally native. And this sounds um, like uh, gobbledygook. It sounds like a bunch of keywords put into a pitch deck, but it's not. It's you literally have assets that are native to digital environments, and human economic activity can happen. And the first thing that happens is financial activity. So you do something for me and I pay you, or you make something and I buy it. And it just so happens that the things you need to make today in today's technology have to live inside of these digital worlds, because then they can be resolved and mediated fully in the digital worlds. And so now we're seeing things that are more and more advanced in the digital worlds, and then we're seeing also bridges being built from traditional worlds into the digital worlds, like taking securities in the form of real estate or commodities or investment funds, creating tokenized equivalents, putting them onto these networks, and then having markets or other financial operations around them. And so I think that's the starting point, and where we're going, the sort of the leading edge of what I focus on is called decentralized finance. And it's just finance. It's the same finance as always finance has been. It is just running on this decentralized infrastructure, which number one is open source. So Elon Musk sent his rocket into space recently using Linux, not using Windows and not using iOS. So Ethereum is open source, Bitcoin is open source. And then number two is, unlike Bitcoin, Ethereum can execute software. So this is it's a big thing. You used to have a computer in the size of a warehouse, then a computer on your desktop, then a computer on your phone, then everything's now in the cloud, and now computing happens on a digital asset network. And so software like underwriting or trading or saving or investing, any of the things that humans do normally. The software to enable that is now run on an open source, programmable blockchain network, hosted and supported and mined by thousands, if not millions, of entities who are generating fees in the billions in order to keep this network secure. And so it's really this emergent financial infrastructure that to me is exciting.
Wow, you said a lot, and you said it quite elegantly. There's a lot of follow-up there that we could pursue. Given the limitations on time, what I think I'm first going to do is just quickly share the poll with everyone so you can see who's here and what kind of thinking we have in our audience. So, you know, we have some befuddled people. The majority of people here are generally conversant in what's going on. We didn't have as many people fill it out as I would have liked. Most people here don't own digital assets, but they are excited about a lot of different aspects of this. Most notably, the single greatest number, which will probably gratify Jalak, empowering the disenfranchised is the #1 thing. And then in terms of what they think is going to happen, they're not really, as a group, generally convinced that this is going to take over everything, which actually is a good way for me to ask you a quick follow-up. Lex, do you think it's right to think that in the future, some version of a crypto-anchored, blockchain-anchored asset ecosystem will effectively, ultimately dominate global finance and commerce?
Great question. I would love to throw some, some sand in the air and talk about science fiction, in response, because I think many industry participants felt that there were these platform shifts in tech, right? So you go from no internet to internet, and then you go from desktop to mobile, and these platform shifts are the blue ocean where the money gets made, right? And so tech giants fighting over the platform shift to have an incumbent position there to create an ecosystem and then capture that. And it's all about, like who wins search. And I think over the last maybe 5 to 10 years, we've seen that our attention is full. There's no more time in the day. So there's no more room for these like permanent platform shifts. Instead, things are getting more saturated. So AR, VR did not entirely destroy the internet. It's a small niche that's adjacent. AI hasn't completely taken away from the core internet either. It's adjacent. Or conversational interfaces did not become this like binary platform shift. And so when I think you look at crypto and payments and finance, I also don't think that you need this sort of platform shift mentality, that it is very much adjacent. And there's been these eras, sequential eras of technology improvement in finance and payments that have not destroyed what's before, but have been necessary for what's ahead. So for example, you cannot stuff dollar bills into your phone to pay your Uber driver. The cash and the Uber app are not compatible technologies. But regardless, you take Uber and some people still pay cash. Alternately, e-commerce, without a web-first payment processor, you don't have e-commerce, and you can't throw your card at your monitor and hope that it works. You need a web native payment processor for the web. And so similarly, I think for things that grow in the garden of blockchain, of which we're only now starting to see the beginnings, whether it is these financial primitives and infrastructures, largely speculative, investment-oriented, alpha-oriented, and you can tell a macroeconomic story relative to that, or whether they are digital work, And that should be an easy story to tell based on where we are today with COVID, or whether they are gaming and assets and, you know, taking your avatar from a movie to a game to something else and owning it as the particular thing. And you can use Fortnite as an example. If these things are anchored to these programmable networks, there's no question in my mind that there's no room for anything whatsoever other than blockchain native payment processors and blockchain native banking. You know, and so I think the question is really what kind of economy develops on this infrastructure rather than how does it remove the old? And just sort of as a final point, you know, I think today Amazon is still doing only 10% of American commerce. You know, after everything it's been to in terms of retail, it's still only 10%, and that's a low market share that we would love to achieve in the blockchain world.
Okay, that was an interesting answer. Jalak, first of all, somebody's asked me to confirm the pronunciation of your name. Could you say your whole name for everybody?
It's Jalak, Jevin.
Jalak. Okay, well then this person was right for me to correct myself, and my apologies.
No worries. I've heard
okay, so I pronounced
every
the
pronunciation
syllable instead of the first, and I will correct myself. So Jalak, I wanted to ask you to. I know you're also quite excited about DeFi. And programmable transactions. Some of the things that Lex referred to. What do you know? One thing that I wanted to ask Lex to define that perhaps you could define is this idea of tokenized assets. Talk about what that means to you and why you are excited about decentralized finance.
Yeah. So these are two. I view them as two different concepts, but they can certainly overlap. One, with tokenized assets, it's the concept of taking any asset. So it could be a stock, it could be real estate, and then just offering kind of shares as tokens of that asset. And where does that get interesting? I mean, this until very recently, you could only buy like one stock. Now brokers allow you to buy fractionalized stocks, so a percentage of a stock. So you know, you don't have to necessarily buy Tesla at one stock at 2,000. You could buy 10% of it. Now, Bitcoin, I mean, that's just been inherent in Bitcoin. And the reason that's possible is the efficiencies that are created by issuing and transferring and recording of these assets. And so if you take the concept of real estate and then being able to fractionalize real estate. So I go, you know, I go to a coffee shop down the street in New York, and I want to actually own a piece of that business, and the owner could use some capital, and we could create assets on the blockchain and offer tokens to people who want to buy into it in a much more cost-efficient way than going through, you know, the current system of doing that. And then you could potentially trade that asset in a secondary market. We invested in a company called Harbor that was just acquired by another company in the space called BitGo, which was doing this around real estate. So bringing the cost of owning a piece of real estate down and then offering more transferability at a lower cost on the aftermarket. So that's still very much developing. And I think, you know, Goldman Sachs just recently came out with a report that said that they do believe that this technology is going to be used across asset classes. So I don't think it's a question of if it's going to happen. It's going to happen simply because it brings more money into the system, greater access, and then greater efficiencies for the issuers of these assets. So that's one piece. Now, decentralized finance, in a way, disintermediates folks like Goldman Sachs and offers the ability for people to directly transact through smart contracts. And so when your previous question asked about if everything is going to run on blockchains, and I view blockchain technology very much, and this has been our thesis since 2014, in conjunction with other new technologies such as artificial intelligence and machine learning and Internet of Things. And so, we now have machine intelligence, which is really what, smart contracts are built on, so that these transactions can happen in a more automated fashion. So I no longer, need a mortgage broker to get a mortgage. I can connect directly with someone who, or a bank. I can connect directly with another entity that wants to transact with me, and we can set the terms through these contracts, and that can happen in an automated fashion. And so in a way, decentralized finance, disintermediate, it's a parallel financial system that operates at a lower cost, all on computers and these smart contracts. Now we're in the earliest stages of this, but and there's going to be a lot of issues around the way these smart contracts work, and are they reliable? But technology is going to continue to evolve, and we're learning on a day-to-day basis. The DeFi market has exploded over the last month even, and there are now billions and billions locked up in DeFi that weren't in the system just a month ago. So I think that shows that there's so much pent-up demand that the current financial system is not allowing access to, or is kind of overcharging for. Now, I think we'll continue to get reliability in that system. I'm sure we're going to get more regulation in that system, but it's undeniable that there's certainly demand for these services.
Oh, great. And so already my questions are clumsy, I can see, but let's pick up on that. And because you really spend pretty much your days doing DeFi related work, and explain to us, anything else that you think we need to know. And if you can segue into that, what happened with Consensus and JP Morgan Chase this week, and whether it's related to the evolution of DeFi or whether that's something totally separate. Sure.
That is a difficult question. So I think, so let's first bracket the size of decentralized finance, right? So if you look at the roughly calculated market capitalization of crypto assets, native crypto assets like Bitcoin, Ethereum, and the other tokens or cryptocurrencies, let's say you're under 500 billion, give or take. And then if you think about decentralized finance, which is a subset, it's a next order evolution of not just a asset inside of a blockchain, often referred to as a protocol. So it's not just one asset like Bitcoin inside of the Bitcoin blockchain. DeFi is about a bunch of people wrote software on Ethereum, and Ethereum now executes the software. My most favorite statistic about Ethereum is that it executes now somewhere around 3 million contract calls per day. A smart contract is just a bit of code. I guess it's a contract in the sense that you do something and there's a meeting of the minds between your software and the software on the other side. It's just a bit of code. So 3 million contract calls per day. So it's doing the work of generating activity, economic activity. And so within the software, within these lending systems and trading systems, there's now about 10 to 15 billions of USD cash equivalents. And I use that term loosely. People in crypto will say stablecoin. You can think of a money market fund. You can think of overnight lending. You can use the word stablecoin. People have jargon, but it's a cash equivalent. And then there's about 7 billion worth of collateralized assets. So a lot of these machines run on, you put an asset in a box and you get something else. You put in some amount of Ethereum, ETH, and you get back some amount of collateralized cash equivalent. So this is, for example, one version of what a bank would do, right, is you give it an asset and you get a loan in response. There is a version of this that now has 1.5 billion of stuff in a box, which is the collateral, and then another billion or so of issued USD equivalent that then people can go and spend on whatever they like, digital sandwiches and so on. And so in total, there's about 7 billion of this accrued. At the beginning of the year, there was about 1 billion. So, you know, we can say it's grown. The Federal Reserve's not going to think it's important until it's at about 50 billion, at which point I think the regulations indeed will come, and a lot of these things look like banks and underwriters and so on. And so that is the very, very edge of the experience. The interesting thing about that are what are now kind of meme words, which is trustless and permissionless. And they sound almost like a flag that people wave around. All it means is that there is no like login experience in the way that we're used to in the traditional sort of Facebook or Google world, where you got a username and password. It's literally, you've got a wallet with stuff in it, and when you bring your wallet to this machine, it will just interact with your wallet. So there's privacy inherent in some ways, where the user is pseudonymous rather than behind a KYC gate. And so that's DeFi. In terms of JP Morgan and the transaction that we had gone through with Consensus Quorum, so that is the other side of what Consensus does, and I think it's massively exciting and is the long game for our company. And so we've talked about what's called the public chain, or mainnet, is this decentralized public Ethereum. There's also, you can take that code base and you can deploy it privately, not with 100 million accounts, but with, let's say, the 15 global banks. And you can deploy that and run a supply chain finance system on it, or a interbank payments network on it, or you can run like a bond desk, capital markets bond desk on it. And so Quorum was an Ethereum variant that JP Morgan had been developing with built-in institutional permissioning and privacy that a large capital markets business needs for its own collaborations with other global investment banks.
Called private blockchain. Kind of.
Exactly, private, permission, and so on. And so this is the other side of the equation, but it's also Ethereum. It's the same code base. So the stuff that runs on public can run on private, and in some versions, vice versa. And so the bet for Consensus is convergence. You know, we are building something that is a bridge between the private world and the public world, and figuring out how can we get assets to move back and forth. But this is the long game, because there's a thick regulatory moat today in between the two different approaches. But we think that, you know, in the longer term, they're going to come together.
Okay, that helps a lot in understanding what little bit more what Consensus does. I still am somewhat confused about some aspects of that, but it is more or less making a bet on the Ethereum ecosystem. Is it dependent on the success of the Ethereum ecosystem for Consensus's business to succeed, or could it work on other ecosystems equally well?
It's a great question. I think there's a bunch of different narratives that people, the timing of these things is very hard to say. So interoperability and the problem of how do the different chains connect is something that I think a lot of smart people have been hashing out. And solutions to that question exist from a technical perspective. They're not battle tested, but they are, as you know, was mentioned before, like these layer 2, these secondary solutions that connect different blockchains together. And so a lot of people thought about this problem, but frankly, the problem doesn't really exist yet. Like there's not yet this massive native economic activity on all these completely different blockchains that they need to be connected together, although in the long run, that's probably going to be the case. In particular, you know, how do the Western blockchains or the open source blockchains connect to the Eastern blockchains and the Chinese blockchain services network and the Chinese CBDC, and all that stuff is going to have to talk to each other in 20 years.
Wait, what's that acronym real fast? Define that CBDC, what was that?
So a CBDC is a central bank digital currency,
Right.
which is a virtual currency or a digital currency issued by the central bank.
Which China is leading the world on at the moment, roughly?
That would be fair to say. So lots of folks can criticize some attributes of whether it is really a cryptocurrency or not, but regardless, in most ways, it looks like one. And then the number two central bank digital currency out there is the one issued by Facebook. That's a joke. But
It's the number
you know,
zero.
the
Right.
number zero. Maybe,
Yeah, because that's not but really quickly, I mean, let me ask, I wanted to get Jalak on the central bank currency issue too, and I've got a bunch of follow-ups more for you, Lex, but since you mentioned Facebook, and it's obviously one of my favorite topics, what do you both think are the, the prospects for, now I've just totally lost the name of it in my head, but Facebook's virtual currency, one of you can say the name of it.
Libra.
Libra, thank you. Yes, it shows how important it's been in my analysis of Facebook recently that I've completely forgotten its name. But
We have a lot going on.
What? There's not a lot going on. Is that the bottom line on that?
No, I said they have a lot going on.
They have a lot going on, but there's not a lot going on with Libra. Wouldn't you agree?
Well, it's definitely gone through a big iteration since its announcement a year ago, where they kind of came out of the gate saying that it was going to be completely decentralized. They were didn't really involve regulators in the process when they had announced it, and they got a lot of pushback from regulators as well as central banks around the world. Who were concerned that, okay, there are 2 billion plus people who have access to Facebook around the world. Now, if all of them started using a native currency that Facebook issued, that Facebook was in charge of, that would decrease reliance on fiat currencies and really monetary policy issuance of fiat currency. I mean, we've seen this, and certainly the U.S. with the stimulus package. It's a big political and economic tool of governments, and so there was so much pushback that Facebook went back, and what they released was in their latest iteration a few months ago was a watered down version where it was much more used more in conjunction with other currencies and in a more regulated way, and also not completely decentralized the way that they had originally proposed. And so we haven't really heard anything about the currency since that last white paper. And so look, I think it's really interesting to think about any company that has a large base of users to issue a currency that could be used across its platforms. So, if I wanted to buy something on Instagram, I could do it through a payment that I received for doing some consulting work through Facebook, and they're certainly getting more. They have a whole new division around payments and finance. I mean, we're seeing this with Google kind of rebooting their kind of fintech strategy. So this is very much in line with transactions and e-commerce and payments becoming a major business model. Now the question is, and Lex to DeFi, once it hits 50 billion in volume. I think once you start to see volume anywhere that starts to kind of compete with the financial system, you're going to see more regulation.
Okay, and I want to go back to why Lex thought it was a joke, but in a sec. But Jill, I was going to ask you about central bank digital currencies anyway. One of the things that's interesting about Facebook and Libra is that because of Facebook's scale, in effect, it was a warning flag that digital currencies could suddenly get scale, right? Way beyond even what Bitcoin has ever done. And is that why, for example, China is now so far advanced in its own essentially fiat virtual currency? Mm-hmm. And there are other countries now trying to do this. Would you say that that played a role in the acceleration of that process? And how important?
I think it did. And I actually don't put central bank digital currencies in the cryptocurrency category. Just like we've seen digitization of a number of things, including like movies that go from reels to bits that then we can consume on our computers. I just view these central bank digital currencies as digitized versions of cash. And where, and I've talked about this, several years ago. I think, it's actually, they're going to be more trackable. I mean, cash right now is probably the number one money laundering mechanism, right? And so if you start to try to get rid of cash, and India's actually moved along in doing this through demonetization in 2016. The government is able to collect tax revenue, can see where money is being spent, and there are initiatives in the U.S. around a digital dollar, but we have very different regulations around privacy in the U.S. than China does. Yeah. And so, I think you really need to think about how these digital currencies can allow for more tracking at the micro level, and then at the macro level, it would really reduce reliance on the dollar, right? Right now, transactions pretty much have to take form in form of dollars. So
foreign currency transactions.
Right, exactly. Now, if you start to think about central bank digital currencies in regions or countries that have their own, where these transactions can happen directly without going through the dollar, and that system becomes trusted, then I think we're looking at a whole new way or a whole new realm of foreign exchange transactions and its impact on the dollar. I mean, the dollar was in such huge demand over during the crisis, and we can imagine during the next crisis that may not be the case because there's less reliance because of these central bank digital currencies.
Interesting. Well, okay, Lex, I did want to understand what you meant by it being a joke, because actually I would say that there's no prospect that Libra is going to be a true cryptocurrency, but it could be an important force in some kind of marketplace action. And in fact, Facebook had coins that were used for transaction within Facebook only years ago. So they've been doing this kind of thing for a long time, but now they have David Marcus, who's a very smart guy trying to run some version of something. We're amazingly, time is flying here, and this is such a multifaceted topic. But Lex, jump in with anything, and I have a very specific question to ask you on a separate topic. Go ahead.
Yeah, so look, it's one of these, it's probably your thesis that I'm stealing, which is that Facebook is a global nation with the power of a global nation and a responsibility of one with 2 billion citizens, and saying
almost
that
with all their services now, in fact.
Right, and saying that we're not we're just a place for friends and not even a media company, but live in our digital castle. Is an interesting move, and I think they had to. There was no better thing that could have happened for crypto assets and Ethereum and Bitcoin than for two of America's largest geopolitical adversaries to both try to launch their own money, those being China and Facebook.
Great way to put it.
And but it is it's sort of a sarcastic observation because it's a much more difficult topic than that. And I think it's fantastic to have lots of different assets on different types of blockchain rails, because end of the day, these are sort of entry points into what blockchain can do. The same way, Coinbase. For many people, Coinbase will be the start and finish of their crypto journey. Or maybe Robinhood. They trade a little bit of Bitcoin on Robinhood, and then they want to have more crypto assets, and they realize Robinhood's not actually giving you anything other than synthetic exposure, so let me go to Coinbase. And then on Coinbase, they realize, oh no, I'm actually not interacting with a blockchain very much. I'm just having somebody still intermediate on my behalf, do this work on my behalf. let me try to interact with something weird outside of Coinbase, because you can't use a Coinbase account, for example, to interact with DeFi the way I've described. So you have to pull your money out into a wallet that's installed on your browser. So Consensus makes one called MetaMask, has 4 million downloads. So you bring something into MetaMask and then you navigate your browser to some weird slot machine in the DeFi world and you interact with it, and you might have an aha moment and collect digital art or invest in some strange opportunity. And then you start getting hooked on this machine is really interesting and different. And so I think for Facebook and Libra, I have no doubt that they're going to execute incredibly well to compete with Ant Financial, and that the Eastern super apps are exactly in the crosshair of who to copy. And I think there's,
Yeah. Okay. I'm just going to cut you off quickly because in regard to that, we just published a really good article by Scott Malcolmson, who's one of my friends and a geopolitical tech expert, about India's importance in the competition between China and the US around tech, and particularly Reliance Jio's potential to become a global force, especially now that Facebook, Google, Qualcomm, and Intel have all put giant amounts of money in. Facebook put 5 billion, 6 billion, and Google put 5 billion into Reliance Jio. So what you just said is going to be really interesting. Reliance Jio could be the vehicle by which Facebook tries to compete with Ant Financial on a global basis. So that was too fast to say, but what I wanted to ask you about was to go to the ultimate level of complexity that I see kind of ambitiously coming into this space. And you said there's so many levels, you both said this. We had Yuta Steiner of Parity Technologies on our stage at Techonomy NYC last year. She's a little bit of a friend of mine who I met at DLD, and super smart, super thoughtful. And they have now, Parity has a system called Polkadot with a dot asset that they've more or less just released, long delayed. But the ambition she had always, and the way she's described it, was basically the internet should become effectively tokenized, or that the internet could be rebuilt around a vision of security and privacy and personal control that would be fundamentally different from the internet we know now. That is the long-term vision that Parity seems to have. Now, at the moment, they've just suddenly released an asset that's suddenly become worth $6 billion. So they've commanded all of a sudden more cred. They raised 100 billion plus 150 billion of capital a while back. But are they competing with you guys? Is that something you could work with or work against? Do you see prospects there? What do you think about that?
Yeah, so definitely work with, absolutely work with. So going back to that interoperability point, I think longer term Consensus as a business is a multi-protocol company. Ethereum happens to be where 98% of the developer activity for smart contracts is today. There were a number of competitors, EOS, Tron, and so on, many of whom, let's say, were beyond the line I would be comfortable operating around. And then there were high quality technical projects solving these issues for scalability and so on that are really meaningful, and we would love to work on them and with them. As an example, there are two protocols that we power today. So Ethereum's one, the other one is IPFS or Filecoin, which is a separate blockchain for decentralized file sharing or for file storage, right? So whereas Ethereum is for running software, Filecoin is for not having a centralized cloud. And so Consensus has a number of business relationships with Protocol Labs, which runs that, and we think they're a great addition to the current equation, and over time that should expand and become more meaningful. But there are network effects for these things, right? Like when people say there's going to be thousands of protocols and they'll be interoperable, that's not the case for how industries really end up. There's usually one number one, and then two number two and three, and then a long tail. And so
Right,
I think,
is that really relevant to the issue about Parity and Polkadot? Because I was just reading an article this morning, you know, just doing the last minute prep of news and stuff that's saying a lot of people are starting to say that DOT could be the third major crypto asset, you know, given its sudden explosion in value. So, and it's also interesting to note that both Consensus and Parity were founded by original creators of Ethereum. So there's real connection here. I'm just jumping in with that.
Yeah, I hope so. I really do. I think so the ability to run lots and lots more applications is a real tangible problem. And so the more like Ethereum is a pipe. Like, remember Real Player in the early 2000s and you try to stream something? That's what it feels like right now to use Ethereum for high throughput transactions relative to the YouTube experience. So Real Player was right. There was no bandwidth, there was no cloud, and the whole thing, you know, just didn't work. And so stuff like Polkadot's fantastic. And I think there's also an upgrade called Ethereum 2, which is massive, which is meant to address the scalability issues of Ethereum and to create a world where you have one chain to which other chains can be anchored. And these other chains can be public or they can be private, and they can be focused per industry or per use case. You know, the media chain, the finance chain, the private cash chain, all anchored on a single beacon chain. And so I think lots of folks are hoping for the world that Polkadot describes, and there are multiple technical approaches. And for Consensus, we are betting on open source programmable blockchains as the next computing paradigm, and I think it's going to be actually quite bigger than the internet.
We're running out of time, but real fast, did I overstate what you see to be their ambition in my question before?
No, I don't think so. I think this is the ambition of the sector, to be honest with you. I think we all see the sort of, not just the reformatting of the internet, which is the internet of data, but creating an internet of value and an economic system that is truly natively digital, which is where I think we're all driving.
Really interesting. And one thing, Jalak, you said that I quoted in the article I wrote, which Lex referred to before, is that, you know, the apps that we need to use these days are just not user-friendly in this space, which is one of the reasons the two of you probably spend way more of your time than you would like, although Lex says he likes it, explaining the basics to ordinary mortals like ourselves. We don't have a Google of crypto. We don't have a PayPal of crypto, really. Although I guess probably Consensus would hope maybe someday you could potentially play a role along those lines. But I want to just ask one quick question that was asked by somebody named Erwin, who didn't respond when we asked him if he wanted to come on by voice, and he didn't have a last name anyway. So he wanted to know about security, and this is, I think, a critical question we should have touched on anyway in all of this other complexity I've been introducing. But how are blockchain transactions secure and protected from tampering or hacking, and is that going to remain the case? Maybe Jalak start, and then Lex jump in with any clarification. Then we're going to have to wrap. Jalak. I mean, Jalak.
I think there are two different elements here. One is the actual blockchain itself and the transactions that are kept on the blockchain. And if you look at a number of the blockchains, including the Bitcoin blockchain, that data has stayed secure. Now, where the hacks have happened have been the on-ramps and the off-ramps that are like, you know, software that has the same kind of vulnerability as any software that we access. So, I think, you know, those on-ramps and off-ramps need to become more secure, and I see a number of companies working on those in terms of, you know, when you're accessing your assets on a blockchain, you know, how many kind of signatures do you have to go through to get there? What do you have to do? Right now, that's not, to keep it completely secure and own all your keys, it's not a user-friendly process at all. And so we're particularly interested in investing in companies that are bridging that user interface. Now, when Lex was talking about all the, you know, interactions with these different wallets and digital, you know, I think the average, I mean, people have so much going on. I mean, nobody knows how the internet works. Nobody cares. They just want it to work. And that's what we're investing towards, a world where, yes, we're investing in the underlying technology, but nothing's going to happen with this technology unless we can create those interfaces where people, it just works for people and they don't get hacked.
What I realize is what we really need is not a Google or a PayPal of crypto. We need a Netscape Navigator of crypto, really, in a sense. Or maybe we need all three. But you know, the one thing we didn't even mention, Lex, was mining, a word that often leads to a lot of head scratching on the part of people like many of my friends and myself. But that is really the way a lot of this is secured at its base, right? Despite all the other issues that Jalak properly pointed to.
Yeah, absolutely. And I don't think we can do it sort of proper
No.
proper justice, but if you can imagine an army of thousands and thousands of robot accountants who do nothing but every moment of their day spend computational power worth of billions of dollars in order to fight each other for the right to secure the network, that would be sort of a poetic interpretation of how mining works.
And they
You
get
know,
paid with virtual currencies.
yes, this is why companies like Bitmain and others are making billions of dollars, because at scale they have both the hardware and the computational know-how to do this very efficiently. And so there's been even a hardware war to create machines that are graphics cards or just computing machines that are the most efficient at running the algorithm which does the work of securing the blockchain network. And so you have specialization, you have competition, the same way you have in other places, and you have some quite smart math that's behind syncing all the information across all the different nodes in this global network, whether that information is a particular unit of value or whether that is to execute software on every single node and have the same outcome.
Okay, well, and you did say that very well. And just to finally complete my attempts to draw metaphors or connections to known reality, maybe mining needs to be understood about as much as semiconductor manufacturing needs to be understood. I'm not sure, but nobody knows how semiconductors are made, and they still use the internet fine. But it is true that mining ends up being one of those sort of blockages in understanding what's really happening with the blockchain economy that ends up meeting a lot of people to just walk away and say, I don't get it. But anyway, I feel a lot of people walk away from this conversation getting an awful lot more than they did before, because you two are both very good at explaining it. I thank you. I'm sorry we went a little bit over. I learned a lot. We recorded this. We will have this video up. I think it will be beneficial for a lot of people to watch in future. I hope you have a good weekend. Thank you, Lex. Thank you, Jalak. And thank you to all of you for joining us.
Well, thank you. Take care.
Thanks so much for having us. Appreciate it.
Good conversation. Bye-bye.